Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Reema and Nigel. Good morning, guys.
Hi, good morning.
Starting this Wednesday with slightly lower cues, lower market cues. And there is an important event ahead as well. And that is basically the market awaiting the Fed Chair Powell to speak. In the past, he's caused ripples, he's caused earthquakes. Will he do the same today? That's the question. Yields and dollar are higher a little bit. I mean, equity markets, not really very much. I mean, just flat to slightly lower. That's the picture in terms of S&P and the NASDAQ. SGX Nifty is indicating about a 16-17 point lower start. But, the last few days, we've noticed a sense of loss of momentum in the market, right? It's not pushing through. You want the market to take out new highs and then build on it, which has not been happening. Reema.
Indeed. For the last 2 days, after hitting fresh record high levels, we've slipped towards the end of trade. But you're right, U.S. markets struggled to bounce back after Monday's sell-off of close to about 1.5%. It was largely a quiet sort of a day. The markets shopped around ahead of that highly anticipated Jerome Powell speech. A quick word on the kind of flows that we had. The FIs bought 1,241 crore in the cash market. The DII sold nearly 744 crore. This would make it the fourth consecutive day of a net institutional buy figure. Month to date, this is the last day of the month of November. That's the picture. The FIs have pumped in nearly 13,500 crore rupees, while the selling by the DIs has been 2,200 crore. In fact, in this calendar year, so far, only in the month of August had we seen selling by the DIIs. And if the picture continues, November would also be a month where the DIIs would be sellers in the cash market. But Prashant, what's the setup? As you said, right, you're seeing some signs of a fatigue. That euphoria is missing to push higher.
I mean, the euphoria is missing, absolutely, right? I mean, we were talking about this on the day that the market made a new high as well, and I think that is the same now as well. So just a couple of points. The big important event, of course, will be the fact that, Fed Chair Powell will speak later today. And I think that is kind of important to note. The reason why that is important is essentially because the last time, first of all, we've not heard from him since our last Federal Reserve policy meeting. Number two, on previous occasion when he's come out and spoken, he's caused, big moves in markets, the dollar, the equity markets, etc. The last, of course, was Jackson Hole, which caused that big shift in terms of market expectations. The general expectation, the base case is that he's not going to do any of that. He's basically perhaps indicate that a downshift in the pace of rate hikes is coming. That is one. But at the same time, also emphasize that we are not there yet. In terms of sort of wrapping up rate hikes, there is more to go. Another 15 December, maybe another 15 early next year. And then, a couple of 25 basis point rate hikes. So in terms of affecting market pricing too much, that may not happen. In any case, I think you'll need to kind of let this event pass. You don't want to preempt it in any way. You just have to look at, James Bullard and what he said in the reaction he caused in the U.S. market just on Monday, earlier this Monday. So that's the reason why I'm saying that be mindful of hawkish risks as well, especially because the market has come up so much over the last couple of days. Here in India, I want to say that over the last couple of days, we've seen some sort of loss of momentum, and I think that has been very, very evident. Yesterday, for example, banks were lower, mid-caps and small-caps ended lower as well. I mean, the mid-caps and small-cap part of the market was down 0.75%, maybe a little bit more, and that's broader market. You want the market broadening, not narrowing. Which was the case last few days, but I mean, it just kind of abruptly ended yesterday with that pullback. Market breadth has been narrowing as well. FII net long positioning at some 90,000 contracts is at an extreme, is at a bit of an extreme. This is data point that I put out last Friday on Editors Roundtable as well, cautioning that, this is indicating that, extremes are never good, either long or short. We are at a position where FI net long positioning is at an extreme. It's not indicating a reversal. For that, you need confirmation from price action, which is not there yet. In any case, if you're trading, yesterday's high of 18,678 becomes important. It could act as a bit of a resistance. And the 18,450 kind of area is the support on the downside. That's broadly the area, 18,400, 450, from which the market kind of bounced and broke through into new higher levels. So that's the picture. SGX is in any case indicating a flattish kind of start. Nigel, what are you watching?
Well, the big question is this long trade on the Nifty becoming too cozy for comfort? And maybe the sense is yes. Because you'd look at it yesterday, then you'll say the Nifty ended higher. But what did well yesterday? A couple of those defensive sectors. You had the FMCG index, you had the pharma index that was higher. and the breadth of the market continued to struggle. So both those two indices did well. You look at the Nifty, it said it was a great day. You look at the mid-cap and small-cap indices, you'll say, well, it wasn't that great a day. The Nifty ended higher yesterday, but the India VIX didn't cool off. That's something that we should be tracking as well. Remember, the VIX has come down, drastically. It's at multi-month lows. But yesterday, in fact, you did see the VIX as well move up with the Nifty, which normally, is not what we normally see. Now, the FI positioning on the long side and the client positionings, well, they are net short. And yesterday, they added close to around 5,000 long contracts. That's in the ratio of close to around 4 longs to 1 short. So let's just pull up the FI, the DI, and the client positioning. The FIs are drastically net long on the index, while the clients, after a while, well, they're getting net short on the index, and the DI positioning as well is net short. And why the client positioning is something that we're highlighting? Because in June, when the markets went to the all-time lows, well, they were long. And we know what happened from there. So the clients, well, they have been getting things right. That's the big family offices, the HNIs as well out here. And you'll have to back them, right? Because they have been getting things right. So for the first time after a long while, they're around 52% of their positioning on the short side. We'll track that closely. Remember, when in fact we went down to those June lows, the FI short positioning, well, it had gone to 87%. So they got it wrong at that point of time. Moving to the options data, yesterday saw the 18,600 put and the 18,700 call. Both of them were very active in trade. But the highest open interest is at the 18,500 put. So plugging in these levels then, the 18,700 call, well, that saw a fair bit of open risk build up. Premiums around 25-30 rupees odd. So the resistance level would be 18,700 to 18,730. On the downside, the 18,500 put has the highest open interest. The premiums in the vicinity of around 25 rupees again. So 18,450 to 18,475, that becomes a bit of a support zone. For starters, the SGX Nifty is suggesting a bit of a downtake. I don't think we're going to see any big correction, but maybe some bit of consolidation, a bit of pullback, well, that'll be par for the course. Prima, what else?
Well, just to wrap up with the domestic cues that you need to track today. One, the Q2 GDP, which will be out at 5:30 p.m. India. The MSCI rebalancing adjustment will also take place today. And tomorrow, of course, will be the auto sales. But let's get through what wise men have to tell us this morning. Mahesh Nandarkar of Jefferies believes the developed world phenomena of rising rates impacting growth through a slowdown in property markets and corporate spending will not happen in India. He says the Indian property cycle has a multi-year pent-up demand and is more dependent on pricing sentiments instead of mortgage rates. He says corporate sector leverage is at a cyclical low and corporate spending will likely rise. He says India's GDP growth should at best witness a marginal slowdown due to rising rates.
Some money market views as well. Kunal Sudani of Shinhan Bank says the US 10-year Treasury yields accelerated as Fed policymakers see no halt in rate hike culture in the near term. He says Fed Chair Jerome Powell will be expected to reaffirm the Fed's unwavering commitment to tackling inflation. He says it is important to continue to watch the dollar CNH pair movement to track behavior in the rupee. For the dollar INR, he says 81.45 acts as a support while 81.90 is a resistance.
On the bonds, Dhaval Dalal of Edelweiss says Indian government bonds have remained largely range-bound as market participants await cues from the RBI MPC on their outlook on growth, inflation dynamics in Q4 FY23. He says lower energy prices, stable USD INR has supported sentiment. A smaller rate hike will likely push the 10-year benchmark bond yield lower to 7.2%.
Well, we have a lot of stock-specific action that we'll be tracking for you. We'll get to that in just a bit. In our special Top 10 segment, we're looking at Zomato, Gland Pharma, Biocon, Zydus Life Sciences, Gujarat Fluorochemicals, Inox Wind as well as Inox Green. They are stocks on the back of positive news flow. While on the flip side, you have Interglobe Aviation, Lupin, and GR Infra. They could be stocks that could be reacting to a bit of negative news flow.
All right, Gary Schlossberg is with us. He's global strategist at Wells Fargo Investment Institute. He's joining us now. Gary, great to have you with us here. Thank you very much. You've been cautious, Gary, last few times. You've been calling this in the U.S. a bear market rally. Is that still the case? And is that, maturing and winding down now? What's your sense?
Well, we're staying with that projection. We haven't even entered a recession yet. We still are looking for a recession to take place during the first half of 2023. And as we enter that recession, earnings estimates, the earnings outlook, we think still has room to move lower, and that will create an added headwind for the stock market. as well. The Federal Reserve raising interest rates still could create a headwind as well for valuations. Taken together, that will create, we think, continue to create a difficult environment for stocks for a time before the market can get some visibility on that recovery later next year.
Gary, morning. Rima here. What's the read on
Morning.
China now? Are you getting the signs that China is preparing to pivot away from its stringent COVID policies? They are looking to up the vaccination for elderly, which is seen as a precursor to a broader reopening eventually. And if that is the case, does China make more sense from an investment point of view, considering that valuations are far more reasonable there and there is that element of underperformance?
I think the move away from a zero COVID policy is somewhat nuanced. There are some risks along with that. China's healthcare system doesn't really have the capacity to deal with a big ramp up in infections if that is the case as they relax that zero COVID policy. There is also the question of how effective the vaccines are in China. So that's one issue. And then out beyond that, they're still dealing with a weak property sector, and that property sector of the economy had been a major driver of economic growth over the past decade. And then on top of that, the overseas markets are winding down, will continue to do so in 2023. And we're already seeing that effect blunt any improvement that we would like to see in China's trade balance as a driver of economic growth. So yes, the easing of a zero COVID restriction does clear a little bit of the uncertainty out there, but we're still looking for a very moderate growth recovery in China over the next 12 months.
Hi, Gary. Morning. So you stick to India in that debate between India and China, right? At current reckoning.
I think so. Valuations are certainly an issue, but the growth outlook, even though we do expect to see it losing some momentum over the next 12 months.
Right. All right. From an India perspective, Gary, we'll be tracking the central banks in the next week or so, both in India as well as the Fed. And the Fed chair will be speaking later today. What are you penciling in? The street seems to be divided with regard to what the Fed will do, a 50 or 75 basis. What do you think is going to be the outcome of 50 would be, read as more dovish, but do you think we'll get that? And what about the RBI? The last time you were saying that, you're expecting rates to go up even here in India, which could be par for the course.
Well, as far as the Fed is concerned, we're leaning toward a 50 basis point rate increase based on the economic data that we've seen of late, particularly the fact that inflation here in the United States has peaked. The other question, however, the other issue out there is to how long the Federal Reserve will be raising rates. What will that terminal rate be? And I think there's more uncertainty about that in the market. Overall, I think the market will remain cautious toward the Fed's policy outlook. As we move into 2023. We do expect to see those rate increases stretched out and modified, quarter-point increases, perhaps 2 or 3 in 2023. We're still looking for the Reserve Bank of India to maintain rate increases as well. And there too, though, we are beginning, we think, to see the tail end of that tightening cycle as we move into 2023. So pretty much keeping pace with the Federal Reserve. Unfortunately, that means that growth, given the lagged impact of rate increases, will create a headwind for the Indian economy next year, although growth compared to some of the other emerging markets, we think will continue to hold up quite well. And for that reason, we continue to find India an relatively attractive market within the emerging market space.
But you did say that growth outlook in India may see some softening in the next 12 months. If that's the case, is there a risk that valuations in India come down? There is some derating?
There is that risk, given the level of valuations. We could see interest rates level out, come off a bit. That takes some of the pressure off of local valuations in India. But at the same time, the growth slowdown that we're looking for will be, we think, a good deal less pronounced than it will be in China. Even as growth firms in China, Indian growth will be a good deal stronger, we think. And the slowdown elsewhere in the emerging market space, we think, will be more pronounced. So it's all on a relative basis, a more difficult year for India, but less so than other emerging market countries.
All right, Gary, we'll leave it there. Thank you very much for your time here. As always, it's a pleasure having you with us on the program. Some sobering news coming in earlier today, and this is actually quite tragic. Vikram Kirloskar, who is, of course, Vice Chairman of Toyota Kirloskar, has passed away following a heart attack. That's a statement from the company which came out earlier. I mean, of course, Mr. Kirloskar needs no introduction. Absolutely a leader of Indian industry in the auto sector, specifically an advocate not just for his company but for his industry as well on various forums like the CII, FICCI, SIAM, and so many more. And someone that all of us have kind of interacted with over the years. So that is some really sad news coming in this morning. Condolences to his family, to his colleagues, friends. That's news coming in earlier today.
Your health is our concern. Choose network or appropriate hospital. Our telemedicine and customer care team are available to guide you. Star Health Insurance, always at your doorstep.
इस सुपरफास्ट जमाने में कार इंश्योरेंस क्लेम का स्ट्रेस क्यों? एक्को ऐप पे क्लेम सेटलमेंट सुपरफास्ट होता है।
Get super fast claim settlement. ACO, welcome change.
Uniparts India Limited now proposes an initial public offer of equity shares. The 100% book built offer is being offered at a price band of Rs 548 to Rs 577 per equity share. Offer opens on Wednesday, November 30, 2022. Offer closes on Friday, December 2, 2022. For risk factors and other details, please refer to the red herring prospectus, which is available on the websites of SEBI, the BRLMs and the stock exchanges.
Pooja, you left the job and still so cool?
Bro, new challenges bring new opportunities.
Oh, really?
Seriously, Rahul, my entire house, now it's an online retail store. Look.
Wow. But money?
Few years back, I'd invested my Diwali bonus.
And now you have LIC's ULIP plan Nivesh Plus. Invest once, get the benefit of both life insurance and maximized returns based on market trends.
One sec, Rahul.
Madam, you are double cool.
Welcome back. Hope you're having a good morning. Well, for starters, the SGX Nifty is suggesting a more or less flattish start. Well, the Asian markets, they were more or less mixed the last time we checked. So let's get some of them up for you on the screen. The Hang Seng as well as the Taiwanese index, well, they're holding now in the green with a gain of around 0.2%. And let's pull up the other couple of markets as well. There was some red on the screen earlier today, but let's see whether or not, a couple of them have turned it on. But guys, before we get to the top 10 list of stocks, feeling good this Wednesday. Guess why? It's that time of the week and that time of the month.
The salary.
Lovely. And midweek through, so we're half.
Has he cracked this joke before? Yes, on a many times.
It depends on whether you're spending the salary, right? I don't think you guys are spending it, so I'm looking forward to it. But anyways.
Well, it's Christmas, right?
Oh, yeah.
It's the time to be
It's the last one before Christmas. You need to be careful.
Exactly. Save up for that, right? Make sure you've got enough till the 25th. Now we've got a top 10.
Well, let's get straight then to the stocks that we are going to be looking at. Rima, well, you go first. You're tracking the aviation space.
Well, finally, the Air India-Vistara merger has been announced. This is something that the street was watching. In fact, there was a press release as well on the 13th of October where the two companies indicated that they are in dialogue. So this doesn't come as a surprise, but it's a big deal. It's a big merger in the aviation space. And the question is, will it challenge the current leader, Indigo? Let's take stock of the market share now. Air India-Vistara combined will have close to a 24% market share in the domestic market. This is significantly lower than Indigo or Interglobe Aviation's market share of 56.7%. So it's less than half of that. But if you see that Indigo's on-time performance has actually been declining. So earlier, many years back, Indigo used to always top the OTP, on-time performance. But in the month of October, which is the latest data that we have from DGCA, Indigo was fourth. In fact, for the last 7 months, InterGlobe's on-time performance has been trailing its rivals, right? So now when you have a merged entity, which emerges a lot stronger, Singapore Airlines will be investing close to about 2,000 crore into the merged entity. So this becomes a far more formidable force. And on the other hand, InterGlobe Aviation is facing issues on its on-time challenge. So are we going to see a shift in market share? So watch out for InterGlobe Aviation as well as SpiceJet, which of course is a much smaller player. So can the merged entity perhaps eat into the market share of InterGlobe Aviation and SpiceJet? There is some time. The merger is going to take effect only in March of 2024. So we've still got close to about a year and a half left. But interesting times, a big merger in the aviation space.
And much awaited, right? I mean,
Yes.
people have been wondering when all of these different, airlines are going to come together because, I mean, there are many which are operated differently, separately right now. So we'll see. Zomato is the other one which should be in focus. There is another block. Nimish is here to tell us about that. Nimish, hi, morning.
Hi, morning, Prashant. So as you rightly pointed out, another large block in Zomato. So Alibaba is looking to sell 3% stake via block deal today. Remember, they own 13%. So even after 3% stake sale, they'll be held with 10% stake. The good part is that there is a lockup of 120 days now. So the further selling from Alibaba cannot happen for the next 4 months. The initial feedback is that demand is strong. The execution of the block will be important to see, but it looks like after an initial red, you might see the stock recovering if there are strong hands buying into it. So Zomato will be in focus on the back of Alibaba selling 3% via block deal today.
Okay, all right, Nimish, thanks so much for that. Well, Ekta joins in to tell us about a few stocks that are in the news from the pharma space. Ekta?
Thanks for that. Well, I'm going to start with Gland Pharma, which is in focus because they did announce an acquisition last evening post-markets. They've entered into a put option agreement to acquire 100% of a French-based company for $120 million. Now, the maximum consideration payable is around 210 million euros, rather, if you add in the addition of debt. But it's a lower margin company. Gland is always known for higher margins. That could weigh, but the momentum could probably continue on hopes that there could be a stake sale in Gland Pharma. So I would really be mixed about what we could expect in Gland today. We did speak to the management yesterday, last evening, and they've said that there is no communication from the parent company on a possible stake sale, but that will continue to be monitored as a news piece. Biocon, they've completed the acquisition of the biosimilar business of Viatris. Biocon's stake in Biocon Biologics will now be 68%. Rajiv Malik, who is the president of Viatris, will now join the board of Biocon Biologics. So a lot of developments, momentous day for them in terms of closing the acquisition. Zydus Life, management meet takeaways, focusing on building a specialty pharma business. Medium-term strategy for India is to maintain double-digit growth. Lastly, Lupin, we've managed to access the 16 observations totally issued to the Mandideep facility. Not looking good in terms of, it looks like a long road ahead for them in terms of remediation. They already have a warning letter which was issued to them in 2019 for this particular plant. So don't expect any respite possibly for this facility as per what experts are saying at this point in time, based on the 16 observations which have been flashing on your screen.
All right, Ekta, thanks very much for that. Pharma, lots of pharma news with the news flow. But more stocks in focus. Vivek is standing by with that list. Vivek, hi, morning.
Well, good morning. First on our list is the entire Inox GFL group. So 3 stocks, Gujarat Fluorochem, Inox Wind, as well as the recently listed Inox Green Energy. Remember, Inox Green Energy raised almost 740 crore via the IPO. Both, some part of it, half of it went to Inox Wind and the other half went to the company itself. And along expected lines, the company has started deleveraging its balance sheet. So Inox Green has paid almost 250 crore in towards reducing its debt, and Inox Wind has paid an aggregate of over 160 crore. The other stock on the radar is GR Infra. Some negative news flow coming in. One of important contract for the company worth almost 592 crore. Now, this contract was pertain to a contract that the company received from the National Capital Region Transport Corporation, and this was regarding the Rajiv Chowk project. So the annulment or the cancellation of this particular project is something that may impact the stock negatively in today's trading session.
Okay, all right, Vivek, thanks so much for that, and thank our entire team for joining in and giving us all the top 10 stocks. Well, here's a quick recap of all the stocks we just covered. Stocks with positive news flow include Zomato, Gland Pharma, Biocon, Zydus Life Sciences, Gujarat Fluoro, Inox Wind, and Inox Green. While stocks with negative news flow, well, they include InterGlobe Aviation, Lupin, and GR Infra Projects.
Let's track the macro cues, which are important this Wednesday morning. The second quarter GDP will be announced today at 5:30 p.m. A CNBC-TV18 poll sees it coming at 6.4%, sharply lower than the 13.5% print in Q1. Lata is here with us in the studio for more details. Lata?
Yes, 6.4 is our poll, and that 13.5 was an understated number. Last quarter, actually, people were expecting 16 and 17%. Even RBI was expecting 16%. So because of that lower number, a little bit of overflow is expected in the second quarter. 6.4 would be a very good number compared to 8.4 a year ago. You shouldn't take it as a lower number because all these are coming off of weak basis for the past 2 years. Let me just give you the amount. The amount of GDP that people are looking out for is 38.05 trillion. And if we do hit that number, we would be 3.2% above the size of the economy in the first quarter, which will be very good. You know, second quarter is a monsoon-drenched quarter. And if you're able to grow 3.2%, that will be very good. Within that, agriculture. Agriculture is expected to grow reasonably well, a good contributor, 3.2%, steady as she goes, like last year and the year before. Manufacturing will be the lead down. Our poll gave a 0.7%. Several people have come with negative. You know, the range has many minuses and a plus 2% or thereabouts. So it's going to be a tragic performance from manufacturing. And one can understand there were a lot of, coal shortages, fuel shortages, chip shortages, all kinds of things that impacted manufacturing. Services will be the super performer. The big items, trade, hotels, transport, broadcasting, financial services, real estate, all these are big ones. All of them expected to do 8.5 to 8.6% over last year's already decent performance, and public administration. You must remember that these did extremely badly 2 years ago. So even last year was only a minor improvement over, pre-COVID levels. With all this 8%, we will just about come to pre-COVID levels. Private consumption is the one people will watch out for. If it clicks 12%, it's very good. It's expected to. After all, we saw very good auto sales. The government consumption also expected to be decent, 9.5%. And gross fixed capital formation, 20%. Don't let it take your breath away. All these are coming off very, very low basis in the 2020 period. Not much of it was made up last year. So we'll have to wait and see. If we do clock 38.05 trillion, we are in a good spot.
All right, Lata, thanks very much. And those numbers come out, of course, later today. We'll keep track of them. Important. Well, outgoing Revenue Secretary Tarun Bajaj is confident that the government will meet the 6.4% fiscal deficit target this year. In an exclusive conversation with CNBC-TV18's Shireen Bhan, he said that the capital gains tax regime needs to be simplified. It's too complicated, but goes on to say that he was disappointed with the feedback response from what he calls conflicting views and interests. Bajaj also believes it's time to completely rethink and reinvent India's personal tax regime, but he did not indicate whether any changes will be forthcoming in this coming budget. Listen in.
The government is feeling very confident that we'll meet our fiscal deficit target of 6.4 in spite of very heavy burden on account of food subsidy, fertilizer subsidy, petroleum subsidy also to some extent having come back. But I think the higher revenues and some other measures which the expenditure side would have taken would see us this year to 6.4. Capital gains tax regime is very complicated. It needs simplification. I've said it earlier and I'm repeating it here that we have various buckets under which we put all products. Financial also we put in different products. So I think all this needs cleaning up, but whether the time is right now, the time maybe was yesterday, if I may say so, but whether it happens this year or not is something for us to see on the 1st of February. I would say that we really need to rethink and reinvent the personal income tax regime completely, and maybe come up with something new and maybe have only one regime rather than having two regimes and giving that option. And the aim should not be to increase the tax rates, even if it is revenue neutral or even if it gives up some revenue, if it makes it simple, if there are less exemptions or exemptions are simple, and if you make more money than me, you pay more taxes. If I make less money than you, I pay less taxes, and not vice versa, which is the situation right now.
Well, time to slip into a short break. On the other side, we'll get chatting with Evan Chauksy of KR Chauksy. We'll discuss all those stocks that are likely to move around. Later on, we'll also connect with David Lennox of Fat Profits to discuss the crude oil price move as well as base metal moves. Stay with us.
Get the grip of good health even after 50. Presenting now, Star Health Premier Insurance Policy. Always at your doorstep.
क्या हुआ चैंपियन?
कैसे बनूंगी चैंपियन पापा? दिन रात प्रैक्टिस करनी पड़ती है। यहाँ तो रात को स्टेडियम ही बंद हो जाता है।
तो खोलते हैं ना रात वाला स्टेडियम। एक काम करो ना, चेन छोड़ के लगाना।
पापा?
अब करो दिन रात प्रैक्टिस, चैंपियन।
एक्स्ट्रा सेफ पॉलीकैप ग्रीन वायर आपके सपनों को रखे सेफ।
This tax season, invest in Samco ELSS Tax Saver Fund that aims to create wealth for you by investing in high-quality, small and mid-sized Indian companies. And the best part, also saves tax with ELSS. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
उत्तरवीर कमाल दिखा अपना, कभी टेबल बन जाता है तो कभी अलमारी। वीर MDF आम प्लाईवुड से ज्यादा मजबूत, ज्यादा किफायती, दिखे चकाचक, टिके टकाटक।
वाह, अब आ रहे हो इंस्पेक्शन के लिए? 3 घंटे पहले बोला था कि मैम बस 2 मिनट में पहुंच रहा हूँ। इस कार इंश्योरेंस के चक्कर में पूरा दिन वेस्ट। चलो अभी प्लीज चेक करो।
मैडम मैं प्लम्बर हूँ।
प्लम्बर आया क्या? आने दे।
सर कहाँ हो?
मैडम बस 2 मिनट।
कार इंश्योरेंस चाहिए विदाउट वेटिंग फॉर इंस्पेक्शन? अपलोड फोटो, रिन्यू इंस्टेंटली ऑन फोन पे। टेंशन फ्री इंश्योरेंस।
Welcome back. Pretty quiet across the Asian market screen this morning. The SGX Nifty is absolutely flat. The Chinese markets, let's pull that up for you on your screen. The November factory activity data has come in lower than street expectation. It's seen a contraction for the second straight month in a row. That's the China data. But, the Chinese market, Shanghai, is absolutely flat. It's perhaps going to clock in one of the best months that it's had this month itself. China's rallied close to about 9% on anticipation or on hopes that perhaps the economy is going to reopen. And remember, it's nearly 45-50% away from its all-time high levels. But the Asian market picture, as I said, is very, very quiet, and that's getting reflected in the SGX Nifty as well. One of the key levels to track will be our all-time high levels, which we hit yesterday, the intraday high, which was 18,678. But let's get you some other important, pieces of news. The Kirit Parikh Committee on Natural Gas Pricing is due to submit its report to the government today. Parikshit picked up details from his sources on what some of the key recommendations could be. He joins us for more. Parikshit?
Yes, the Kirit Parikh Committee is likely to recommend a complete liberalization of natural gas pricing by 1st January 2026. The report will be submitted to the government today, and thereafter the cabinet will take a call on implementing the recommendations. The committee has suggested minimum and maximum price caps for APM gas. This includes the likes of ONGC and OIL to help moderate prices of CNG and piped cooking gas. The report could recommend a minimum price of $4 per million BTU and a cap or ceiling price of $6.5 as against the current rate of $8.57. The committee is not likely to suggest any change in prices of gas from difficult gas fields. The committee will recommend measures to increase domestic production of gas and reduction of imports. The panel was formed to review gas prices and suggest a fair price for the end consumer and a reliable gas pricing regime for the economy.
All right, Parikshit, thanks very much for that. That got stocks in the oil and gas space a little excited. We'll track the impact of that as we go along. Manisha is now joining in. We're sticking with commodities. What's top of mind for Manisha? Manisha, good morning.
Morning, and thank you for that, Prashant. Well, I'm looking at the crude oil prices where it is off 13-month lows that we saw on Monday itself. Having said that, the prices are still 9% down for the month of November, and they are now down by 40% from the March highs as well. But all eyes on what China really seems to be doing, where they are relaxing some COVID restrictions. But what kind of demand could we see is still a question mark, because when you looked at the October imports of Chinese oil, they were at 10.2 million barrels per day. By November, these reached 9 million barrels, and the reports suggest that we could fall below 9 million barrels per day of Chinese oil imports by the month of January. So still some weakness continuing from there unless we see concrete steps being taken in the next couple of months. But good gains continue for the metal as a sector. When you look at the month of November, we are looking at copper prices up by 8%, aluminum is up by 7%, and very strong gains coming in for the ferrous metals as well. Steel is posting nearly 6.5% of gains for the month of November, while iron ore price is up 25%.
Manisha, thank you very much for providing us the lay of the commodity land. David Lennox, analyst at Fat Profits, is now joining us on the show. David, morning. Rima here. There are two variables, as Manisha pointed out. One, what happens on the 4th of December OPEC Plus meeting? Are we going to see a production cut? And secondly, statements coming out of China and whether there is going to be a potential reopening. Your thoughts, your expectations on both these two events?
Look, certainly let's have a look at OPEC first. I suspect at the moment that just the news that they may in fact go ahead and do some production cuts come December may be enough to drive the markets a little bit higher. So one would suspect that if that's the case, then we will need to see some follow through with some actual cuts. Now, we know they've already sliced 2 million barrels off production, and that certainly kept the oil price from probably a more dismal level. And from that point of view, we think that they will be continuing to look at that. From the other aspect, what China's doing, well, we certainly are well aware that there's now a disruption inside that country, not just from the COVID closed down, but also now from rioting. So from that point of view, things have to improve significantly before I think investors start to believe that China's going to open anytime soon. We haven't seen that shift fully from a zero COVID policy. It is still there. Yes, they are playing with the edges, but it may be that the population's going to force them to do that in due course. And really that could see further disruptions to the economy, further close downs. It is really all up in the air at the moment, but one would have to suspect that if this does happen, we see the population starting to take action, we will see some action by the Chinese government to actually look to handle COVID in a different manner.
Morning, David. Well, from an India equity perspective as well as from the economy perspective, it's very important with regard to the crude oil price trajectory. So from here on, where do you see that number headed? I mean, we are celebrating that it's closer to around $80 rather than the $100 plus that we saw earlier this year. But where do you see that number headed? I mean, do you have a broad range?
Certainly the range is going to be very broad because we didn't think we'd probably see it down towards these levels where it is until such time as we were well aware that China was having trouble with containing COVID. Now, that was going to be the case. No country in the world's contained COVID. They've had to learn to live with it. So as we've just said, if China actually does come to some form of we will live with COVID, then we could see the oil price really start to move away back to the high side. And that $100 is not out of the question, especially if OPEC go through and make their cuts. But when all that's going to happen, all we can be sure of is that in early December, OPEC are going to meet. We will see, we believe, some production cuts there, maybe another 1 million barrels coming out. Not quite so sure on that level, but that's probably close enough. But the China story still remains very much up in the air. And really, that's going to be the swing. As to the range, am I allowed to say between about $70 and $100?
So that's $30, right? Not long ago, the price was $30. I mean, actually, some time back, and now 70 to 100 in terms of a range. But all these predictions of, structural supply issues, etc., I mean, they're not... maybe they will come to the fore at some point. So as you're saying, 100 is not still out of the question. It's just, I guess, anyone's guess with what China is doing or not doing. What about product margins, David? I mean, I don't know if you track them. With oil prices coming off, right? Product sort of margins should rise, right? I mean, end product prices are not falling. Sorry, go on.
Look, one would suspect that, yes, if we do see moves in the oil price to the downside, that we would see margins start to improve on the product side. But unfortunately, a lot of that's got to do with where your currencies are going as well. And in a lot of cases, we're seeing currencies move in the opposite direction to the oil price, which means that if the oil price is falling and your currencies are also falling, that's going to really take some of the shine out of any of those margins. So one would have to suspect that we will, yes, probably see margins improve, but that's going to be dependent on which way your currency is going at the time. And again, like the oil price itself, really to say where currencies are going, it is very difficult to determine. The only thing we are well aware of is that we have seen the first signs of the US dollar showing some signs of weakness. Now, that may help a lot of other currencies to improve in value, so we're watching very closely there. But look, margins, expect them to improve, but just watch out for which way your currency is heading.
David, before we let you go, I wanted your view on steel as well as on iron ore. Now, the call is that maybe iron ore is basing out a little bit at current levels, and maybe steel prices in China are far too weak. We've seen a sharp correction from the top. You know, the reason I ask you this is because if they dip a little more, then maybe some of those steel makers will not be making any money. So that's what could give some bit of a base to steel. I wanted your view on steel prices and iron ore prices.
Look, certainly if you have a look at the steel market, look, there is still significant demand for steel around. Yes, China's disruptions have caused some softness in those numbers, but not significantly to really damage the steel price to any great extent. And with that, we've also seen the iron ore price tend to be, yes, it dipped to around $80, but it has come back up and quite significantly so. So that would suggest that the demand-supply equation in the steel market and the iron ore markets are probably at this point in time tending towards neutrality. And if that's the case, and we do see China perhaps start to move properly towards reopening, then watch out. We can expect to see steel demand surge, because all that's happened in China over the last 12 months is to really just back up any demand that they have. It's not going to go away. It's going to coil out fairly quickly, and that could be a very good flip-it for both steel and iron ore prices in the not-too-distant future.
Right.
Again, we need to see China opening up and properly.
Right. David, just a 30-second response to this. I know you said on product side, currency is important, but are refining capacity still very constrained, or is that issue now behind us?
Look, we certainly think at this point in time that's probably fairly much behind us. We've seen now a shift in the way in which products are distributed around the world after the Ukraine-Russian war started, and that's now becoming norm. So from that point of view, we think those shifts are now becoming the norm, and we should see capacity pretty right for the rest of this year. Well, not that there's much left, but certainly into next year as well.
All right, David, thanks very much. Great speaking with you. I mean, I think we saw that big move last couple of days on Reliance Industries here, of course, which is the largest company in that space and largest company overall. You know, I suspect some of that perhaps could be with regards to this fall in the price of oil we're seeing. Oil prices are falling, but products is what, you know, companies like Reliance sell, which is they refine the stuff and then they sell it. But are those pricing falling as fast? Perhaps no. And that leads to a difference in margin. But that should show up in standalone refiners, etc., as well, like MRPL, CPC. That was the story the last time around this had happened. So we'll watch. But David is saying that some of this sort of refining capacity constraints, that is also now behind us. It's not as tight as it was even a few months ago. Devin Choksi of KR Choksi is with us. Devin, good to have you with us here. Thank you very much. I mean, just to pick up on that point on Reliance on the refining side, Devin, what's your sense? How are things looking? And will we see better margins overall in the refining segment?
Yeah, good morning, Prashant. Well, I think the immediate breather is basically the fall in the crude oil prices. And because of the fall in the crude oil prices, I think two impact, I think, which one you can count. The immediate one would be, I think, the windfall tax component is coming down, because I think the fall probably, I think, is now averaged out to around $80 and around. So that could possibly, I think, bring down your windfall tax component, and that is where I think you will have some amount of savings. On the other side, I think for sure, with the cheaper sourcing of crude available with them, they are in a much better position to maintain the margin. And as you rightly observed, the cracks are not falling as sharply, refining cracks are not falling as sharply as I think the fall in the crude oil prices. So to a greater extent, at least in the immediate period till the time it is normalizes, I guess I think they will be in a better position to register higher amount of margins going in this particular period. Of course, I think the price is required to remain stabilized. And as we were talking earlier also, anything which is around $75 to $85 to a barrel, I think is a good price for both the demand as well as supply side situation in the world. And that's where if that stabilizes, then I think you are going to see the normalcy in the refining margin and normalcy in the other petrochemical products pricing and margin also.
Deven, morning. Rima here. Your thoughts on the big shift that we're likely to see in the aviation space with the merger of the two Tata Group entities, Vistara as well as Air India? What impact is it going to have on Interglobe Aviation, SpiceJet? Is this perhaps a signal that one should pare down positions in Interglobe and SpiceJet if anyone does hold?
Rima, good morning. Well, my sense is that I think, yes, the demand scenario continues and higher occupancy per seat, I think, is continuing, I think, in most of the, aircraft as we are seeing across, I think, the players. So that is one good sign that we are seeing. At the same time, I think the prices probably, I think, would get rationalized. We have seen in recent past the surge in the prices because of very other factors, including the aviation fuel prices. I guess I think the price is coming down because of the crude oil. I think that also is likely to rationalize the prices in most of the cases. At this point of time, I don't see a major shift happening as far as I think the passengers traveling preference is concerned from Indigo to other airlines. So that particular point I think is not something which I think immediately coming on the surface. But yes, I think the kind of price rationalization and I think higher occupancy per aircraft I think is basically going to drive the business going forward. So view is not, I think, to shift out of Indigo airline. I think we would like to stay. That I think the valuation becomes normal, then it is a better opportunity at both.
Hi, Deven. Good morning. Deven, I wanted to ask you about Gland Pharma. Yesterday there were reports that indicated maybe the promoter Fosun, they want to go ahead and sell out. Now that's still up in the air. But post-market, they made an acquisition, and the valuation on their acquisition looks pretty fair. Close to around $200 million odd, one-time sales upon EV. But what's your sense out there? How do you approach the stock? The problem with this acquisition is margins are far lower, and ratios as well will get a little bit diluted. How do you view this stock?
Yeah, in fact, I think Nigel, I was about to add that point, and I think you mentioned it, that the margins in these acquisitions are low, and that could possibly be the reason for which I think they've acquired this company at a reasonably, I think, lower price as we have observed. Honestly, I think we don't have coverage on this company, so won't be able to specifically talk about, I think, how exactly it will benefit the company or otherwise. So may refrain from putting any further observation. I have just, I think, interpreted the news, I think, which came yesterday.
Deven, any thoughts on one of the movers yesterday was Bandhan Bank. It moved in the mid-session onwards. CLSA has upgraded their rating on Bandhan. Huge underperformer and many false starts as well. I mean, it looked like it was turning, but eventually turned lower. Any sense, any thoughts?
So, Prashant, I think the past pains, I think, are probably out as far as I think this business is concerned on the microfinance side. And as a result of which, I think most of the MFIs probably, I think, having the situation of lower amount of offtake, or I think maybe at times, I think one can say that I think they were reluctant in, I think, lending further because of the pressure which was there on the balance sheet side. But that situation has gone away. I think more or less the rural markets are quite, I think, healthy at this point of time. And after the crop season, I think probably are going to see higher amount of demand happening for the credit as well from the rural side. And that's where I think companies like Bandhan Bank operates. So maybe I think there is a case for re-rating going forward. But again, I think we don't have the coverage on the bank, so we will not be able to specifically say about the valuation aspect of it.
Zomato, there's going to be another big block deal, Deven, today. Alibaba is looking to sell some stake. Thoughts on Zomato?
Good luck to all of us, I think, who have basically been waiting and seeing this particular company progressing on one side with a higher amount of market share. the investment, I think, is specifically not rewarding per se. And as I was making a point, that as a consumer, you would be very happy to buy the services of Zomato. But as an investor, I think we'll have to wait and see till the time I think the company actually starts making the profit. The fundamental view still remains. I think one would like to see the sustainability of the profit making for this particular company. Should that happen, then probably they could make a case to buy the stock at lower levels into the market.
Is there, Devin, more momentum? FMCG did very well yesterday, right? So Lever was up 3%, Dabur was up strongly. What is your sense? Is there more left here? The big complaint has been slowdown in rural markets, not just from analysts, but from companies themselves as well. We had the management of Godrej Consumer Products just yesterday telling our colleague that it is a big issue. Your sense?
Prashant, I think our market and analysts would always like to look ahead and not probably the current situation or the past situation. The current situation in which I think the prices of edible oil has come down, I guess I think that is going to be having a better impact going forward as far as FMCG companies are concerned, particularly in that area. So basically all input prices have actually started coming down, and that gives a breather effect. What was, I think, adverse in the first half of the financial year, probably I think that adversity is going away, and in the second half of the financial year, the normalization on the margin is expected. So on one side, because of the cost of input is coming down. On the other side, most of the FMCG company, in order to bring up the demand, they play with the weightages, I think, in the product that they sell. So quite possible that I think they have probably would find some packages coming up with, I think, 20% more, 30% more kind of a product inside the packet. I think this kind of situation is likely to once again give them the volume-led realization and the growth going forward, and they could basically maintain the same price. Largely because of the pricing pressure coming down, one is expecting that in subsequent period of time, we are likely to see the demand scenario remaining relatively more stronger. And at the same time, in the rural economy, with the funds coming in the hands of the people after the crop season, I guess I think it's going to revive the demand. So that is where probably our markets have actually given thumbs up to the FMCG counters at this juncture.
Okay, all right. Devin, before we let you go, I wanted your view on the real estate space and Oberoi Realty in particular. You have few listed players, and Oberoi Realty normally used to be the top name that everyone's talk about. Unfortunately, this Worli project is getting into some trouble or the other. What's your sense? I mean, the stock has corrected a fair bit from the recent peak as well. What would you do with the stock, or do you believe there are other better stocks that you would rather invest in from the real estate pack?
So, Nigel, I think this is a common phenomena with, I think, most of the real estate construction companies. Very in a particular quarter or particular period, I think you might have some amount of cloud on certain projects, and otherwise, I think it could probably, I think, dampen the stock prices. In my viewpoint, I think the demand scenario for real estate remains intact, and I think that continues to remain strong. Of course, I think in last 2 years, whatever the surge in the demand that we have seen is now started getting a little bit normalized. But the premium housing, particularly, I think where the demand scenario remains, I think, quite strong, is continuing in coming period. So from that perspective, I don't see too much of a challenge for real estate companies. In my viewpoint, I think to play on a safer side, I would probably prefer to stay with housing finance companies more than buying into any of the real estate companies, for a simple reason that housing finance companies are recording around 20% kind of an average growth in their credit lending. The book size is growing by that percentage. And as a result of which, I think you are pretty sure about the sustainability of the business. And because of that particular reason, I think one could possibly remain relatively more safe compared to the volatility which would have otherwise in a construction sale kind of an activity. So preferable, I think, is housing finance vis-a-vis investing directly into the real estate companies.
Devin, thank you very much for joining in. Need to slip into a very short break. On the other side, we'll invite Sudarshan Sakhani and Mitesh Thakkar for some technical trading ideas.
Everything we do has an impact on the climate. But how can we transform that from a negative into a positive?
The whole essence of creating Petronas was really to create that positive social impact.
I've been out to the rainforest and seen some of the work they're doing there. We're going in the right direction.
It's about working together to deliver sustainable impact.
Different ages, different stages. Get best protection with Star Women Care Insurance Policy. Always at your doorstep.
दादा आप फ्लाइट कहाँ बुक करते हो? इक्सिगो। ट्रेन? इक्सिगो। बस? इक्सिगो। साइकिल? इक्सिगो। ज़्यादा बोल लिए। बड़े ज़्यादा बोल लिया। और कौन सा ऐप डाउनलोड करना चाहिए? इक्सिगो। और निकल लो।
A multi-asset portfolio for your wealth is like a wholesome meal for your health. Presenting Baroda BNP Paribas Multi-Asset Fund aims to provide diversification and optimal risk-adjusted returns. NFO closes on 12th December 2022. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
उत्तरवीर कमाल दिखा अपना कभी टेबल बन जाता है तो कभी अलमारी वीर MDF आम प्लाईवुड से ज्यादा मजबूत ज्यादा किफायती दिखे चकाचक टिके टकाटक
ये लो अब खाओ कद्दू इसके चक्कर में 2000 का चालान लग गया
बाइक इंश्योरेंस रिन्यू करते तो नहीं लगता ना पापा
अच्छा इंश्योरेंस कितनी महंगी है पता है मैं यहाँ पैसे बचाऊं सस्ते कद्दू के चक्कर में 15 किलोमीटर दूर जाऊं कोई कदर नहीं है मेरी
2000 रुपए का सस्ता कद्दू
बाइक इंश्योरेंस महंगी पड़ रही है प्रीमियम स्टार्टिंग एट जस्ट ₹1.5 पर डे ऑन फोन पे टेंशन फ्री इंश्योरेंस
Okay, welcome back. You're with us here on Bazaar Morning Call. There's 7 minutes to go for the pre-open session, and it's going to be a flattish start as per the SGX Nifty futures. Just a 10-point change. Sudarshan Sukhani and Mitesh Thakkar are with us for some technical trading ideas as always. Gentlemen, good morning. Good to have both of you here. Sudarshan, what's the trade today? Last 2 days, I mean, one can't help but notice that at least on the Nifty and yesterday, even in broader markets, there has been some noticeable loss of momentum, Sudarshan, on the upside. Markets are hesitating, coming off, especially in the last 60, 90 minutes of trade. 2 days now.
Yeah, good morning. See, there has been a loss of momentum. In fact, for the last 3 weeks, markets have moved up in a range of 200 to 300 points. The Nifty is consistently going up, but it's at a much slower pace. That's normal. First, the markets get nervous when lifetime new highs are being made. Secondly, we have run up a lot. So markets are nervous about the possibility of a correction starting anytime. But none of these events have happened. So the trade is still to be on the long side of the market because we cannot anticipate a market change which has not occurred up till now. So be long, but the idea is not to be long on breakouts, but be long only on deep corrections, intraday corrections. I think we are getting those intraday corrections almost every day. So yesterday we were long at the open. But today we have to wait patiently for at least a 75 to 100 point decline from the opening prices, whether that happens today or tomorrow, and only then go long.
Mitesh, morning. Rima here. What would your trading ideas be?
So I think, very clearly, we've been maintaining some kind of a long bias on the markets. But yesterday, I was highlighting this point that we've been slightly overbought on the hourly and the 2-hourly charts. Typically, there could be some profit booking and pullback happening. I think, again, I would agree with Sudarshan on that declines would be a better chance to buy. 18,550 is the first support pivot, but in the worst case scenario, even 18,425, 440 zone could be visited, and that's been excellent buying time. In case we start breaking below that, then I'll be worried, but for the time being, that looks to be the immediate support area, which should hold and give you a strong bounce back. Having said that, we are trading with more of long bias on stocks specific basis and eventually maintain that 18,750, 18,900 are the targets on the Nifty.
Okay, all right. Good morning, gentlemen. Got your calls on the index. What about individual stocks? Mitesh, you go first.
Morning, Nigel. I have more of buy calls today, 3:1 on the buy and sell side. I have Cipla as my first recommendation, buy with a stop at 1109, targets of 1145. And Sun Pharma is a buy as well with a stop at 1035 for targets of 1080. ICICI Pru reverse from oversold level, so that's a buy. Keep a stop, a very tight stop at 467, look for a first target of 480. And Navin Fluorine is the sell call with a stop at 4340 for targets of around 4200.
Sudarshan, what about you? What are your picks?
Well, the picks are mainly in the mid caps. Godrej Consumer Products is a buy. It's also confirming a bullish pattern. So the buy with a stop under 845. Havells is the only intraday short that I have. Havells has been a disappointment, underperforming at least for the time being. So look at an intraday short with a stop above 1241. Pidilite Industries similarly, like Godrej Consumer, is having a fairly bullish pattern after a decent decline. Consider buying this with a stop under 2685. And finally, Trent, which seldom figures in my list, has seen a V-shaped reversal. It was falling, and all of a sudden, like a V-shape, it has started going up. It's interesting. So consider buying that with a stop under 14.25.
Okay, all right. Thanks a lot for that, gentlemen. Well, time to slip into a short break. We come back with pre-opening. We'll also get chatting with the management of 5-Star Business Finance. Stay with us.